Welcome everybody to our Bay Area Housing Market Town Hall, and this is our 12th episode. So we always start with our state of the market, what had happened since our last episode 11. Now let's take a look at some housing market statistics. Here we have May, June, July, August. As you can see, since May, things have been picking up. August, again, usually has been like the slower months because it's summer, but our new listings has gone up quite a bit. Change to pending still has gone up quite a bit. And this is aggregate numbers from the 5 counties in the Bay Area. So the real estate market definitely has been going really strong. And here's another chart that I want to share with you. Is Santa Clara County from last year September until this year of August 2020. If you look at the sales price to list price ratio, that means like how much people are offering above the list price, you will see that it actually has gone up since May, and it has gone up quite a bit. But if you really pay attention, in the beginning of the year, February and March, it has gone up a lot. It was like over 5% over asking price. But if you compare to last year was very slow. A lot of people have been waiting until this year in 2020 to make their purchases. But because of coronavirus, obviously it had dropped, but it picked back up really quickly as soon as we're allowed to do showing. And if you look at the day to sell, number of days to sell, and the properties have been staying on the market, it's just slightly longer. It's 19 days now on average. But again, compared to last year is over a month. Market was definitely way slower last year compared to this year. And here is another chart to look at the new listings versus like how many listings have been sold. And if you see that this year, August, compared to last year, September, the new listings is like, actually we have a little bit more, but we have more sale as well. So, even though we have more listings, the price has gone up still, and we have more sales going on. Last year, you could tell that the number of sales is actually pretty low last year. And we definitely, on the ground, we noticed a lot of buyers, we would do open houses, a lot of buyers would come in, but at the same time, the number of offers compared to how many people were looking was quite drastic. So this year, we definitely noticed that there are a lot more people coming out to truly purchasing properties. And one of the main reasons is, of course, because of the interest rates. Now, if you look at San Mateo County here, compared July last year and this year, if you look at the price for single family, it has gone up from 1.72 to 1.81 million dollars, and the number of days though has come down, and also but then the number of sold listings actually had gone down as well a little bit. And if you look at the condos, the pricing has gone down slightly, 2.1%. Average days on the market again is have gone down. People are purchasing a lot faster, and we have just slightly higher, just one property more in terms of closed sale for this for last month in August. And this one is on the East Bay. East Bay number, if you look at the numbers in terms of like how many units have been sold, and you'll see that for current year, we have 2.56, around 2,500 units, and versus this last year, 2,400 units, we had gone up 6%, but for the last few months, actually number of units had gone down. So people are actually back to quite actively looking on the East Bay area. Now, in terms of purchase application, this is through the mortgage. We want to see like how many people are doing purchase applications. Then you could tell that how active it is. You see that, of course, in March during the peak of the coronavirus pandemic, the purchase applications were quite low, but afterwards it had picked up really fast. So that really also explains why we have such a high activities in terms of purchase. And even Quicken Loans have been saying that the pandemic has not stopped the consistent home price growth we have witnessed in recent years. Realtor.com, here's what they said: despite the crippling and ongoing coronavirus pandemic, millions out of work, a recession, a national reckoning over systemic racism, and a highly contentious presidential election just around the corner, the residential real estate market is staging an astonishing rebound. mean, I know there are a lot of fear from some people. They're wondering what is going on. It seems like there is so much going on, but at the same time, residential real estate market is really truly showing a lot of activities. And there are a few reasons. It's because of the coronavirus pandemic. People have changed the way they live, and they want to move out of the area, or they want a little bit bigger space. So a lot of things have changed the way people live, and that's why the plus on, of course, on top of the interest rate being so low, that's why there are a lot of activities in the real estate market. Now, so what are they projecting on the future home prices? We have shown this chart last month as well, and it's still, their projection is still pretty strong, all the way from 4.4% down to -1.1. So relatively speaking, most of the organizations have been predicting a higher number, while two organizations, CoreLogic and Houzz, they are predicting a very small drop on the price. And what about the mortgage market? We mentioned just now the interest rate has been slow. That's why it has been pumping up these residential real estate activity. If you look at the jumbo 30 years fixed, this is today's rate. And again, reminding everybody, this does not apply to every single person. Last month, I showed that it was 3.125. I think the month before was 3.25. So it has continued to come down on the jumbo rate. And I know that I wanted to remind everybody, there are programs out there being advertised right now saying that you can get 30 years for 1.99%. Be sure to ask about what is the points, how many points that you need to pay in order to get that 1.99% for 30 years fixed. It's really important. It's not, it doesn't come cheap, but if it makes sense, then that's great. But you have to make sure that it does make sense for you to take that 1.99% and then pay. Each point equals to 1% of the loan amount. So let's say if you have a $100,000 loan and it costs 1%, that's $1,000 fee. So be sure to double check on that. Now here is the mortgage rates projections. Again, from Freddie Mac, they are projecting the rate is going to continue to come down. And then about 2021 Q1 is going to stay pretty flat. We looked at another chart last month as well. They are pretty much the same. So we are expecting that the rate is going to stay pretty low for 2021. Now, what about multifamily? Today, we are talking a lot about the landlord and also tenants. So multifamily definitely is something that we need to take a look at. A lot of people are really wondering about the rent collections. There are, of course, this is like not the most up to date. It is up to July. Until July, there's still really strong rent collections. I do see that starting this in August, we started to hear a little bit more about like late payments from tenants and more of the not able to collect all the rents. But the rent collections have been held pretty strong. And then the Class A vacancy definitely has started to climb. But in comparison to the lower tier rentals, they're actually less impacted in 2Q. And if you see Class C rent here, they're actually a little bit more stable compared to Class A and Class B properties. And also about the vacancy, they actually rise a little bit more in the high cost coastal markets, and the rents in the fewer smaller Midwest metros, they are more resilient. So it's pretty accurate. We definitely have seen quite a few of these larger markets. The rents has come down quite a bit, and while the suburban market, the rents have held pretty strong. And so as you can see the chart, same thing here, that the suburban vacancy has come up a little bit, but it's not as bad though. And then in terms of the pricing and cap rates, this is the one that I think it surprised a lot of people, is that the cap rates have held up pretty strong during this time. So the average cap rate is still right around 5. And one of the main reasons is, of course, is because of the interest rate is still pretty low. And then the secondary and tertiary metros have increased momentum. The pricing actually has come up, has been staying pretty strong, and we'll still see pricing that some sellers still they're holding out on their pricing, and buyers want to have a good deal at this time. And we still have this gap that the seller and buyers may not be able to meet, unless the seller really in a desperate situation, they need to sell. Otherwise, we still don't really see the seller willing to come down on their pricing that much. And here is the chart that we were just talking about, like some of the metro cities, they have gone down and rent prices for these one bedroom rent prices. San Francisco, obviously we've been hearing a lot. San Francisco came down to 14%, Mountain View came down 16%. But let's look at some of the suburban market. Vallejo has gone up 4%, Antioch 3%, Concord 3%, and Livermore 10%. We do see that some of the outskirt area that have a relatively lower rent has actually gone up in rents. And here is if you want to see what's the ranking in terms of like how expensive one bedroom rent is. Now you can see San Francisco, of course, they are number one. They're, as a matter of fact, they're number one in the country, not just in California or Bay Area. And all the way down to Vallejo right now is actually the lowest rent in the Bay Area. And we have been hearing so much about evictions. It's just like this one topic that will never, it seems like it just can't go away. We are all wondering what is going on. Tenants are really worried that because the news keep talking about they are going to be evicted if they cannot pay rent. Landlords are really worried that if the tenants cannot pay rent, they cannot pay the mortgage. And recently, CDC director, he actually signed a declaration to say that the evictions of tenants could be detrimental to public health control measures to slow the spread of SARS, COVID-2, the virus that causes COVID-19. So it seems like CDC had also come out to say that, hey, we need to halt the eviction to prevent the spread of the virus. And now, again, we have all these news headlines. The California renters financially hurt by the pandemic will be protected from eviction until at least next February, while small landlords will be offered some foreclosure protections under a measure approved by lawmakers and signed by Governor Gavin Newsom late Monday night. Here, statewide eviction is not just California, it's actually a whole entire country. There are some states that don't have this state executed order, but we do have now the federal eviction order as well. So this is one of the reasons why we have invited Daniel Bornstein to come and speak to us today regarding this situation. How do you handle this tenants not paying, or how do you handle the eviction if the tenants really is causing some issues? Thank you so much for watching our YouTube channel, and don't forget to subscribe to our channel, like our videos, make some comments, because we're going to keep you posted on the most updated real estate news, housing market data, and also real estate tips and advice from all over the real estate industry. So thank you so much for watching, and I'll see you next time.